Good morning or good afternoon, everyone. This is Phil Trem, President of MarshBerry's Financial Advisory Division. Happy to be coming to you today with Joel Wood, Senior Vice President of Government Affairs for the Council of Insurance Agents and Brokers. Many of you have been following along on our daily blogs, trying to provide an update to the industry on current events. And we're very, very fortunate to have Joel joining us today to talk a little bit about what's happening on Capitol Hill around government stimulus and how that can impact both our economy and insurance brokers and agencies specifically. A point of note, today and at the time of taping, it is roughly 11 a.m. Eastern time on Friday, April 10th. We're going to publish this Monday morning or Monday the 13th. And as things continue to evolve and change very, very quickly, we're putting a quick caveat out that things that Joel and I discussed today could have changed by Monday or when you're actually seeing this. So, again, happy to share our information, but as things continue to evolve, we suggest you continue to check in with us and check in with the Council of Insurance Agents and Brokers for current happenings. Joel, thank you so much for joining us. Maybe a brief introduction, if you wouldn't mind.
Sure, Phil. Thank you so much for the opportunity and for the friendship of you and the whole MarshBerry team over the years. So I've been with the Council CIAB for 27 years running government affairs. So we've been through some interesting experiences between the last financial downfall, 9/11, the Spitzer Inquisition, and certainly this has been the most challenging. So grateful for everything you're doing, and forgive the grouchy dog in the background.
Oh, I'm sure my dog will be barking too. And as you can see, I said Joel's background is way better than mine today, but we're connecting to all of our audience today from our home offices as well. And we're thrilled to have you. And Joel, I think just to start, I'd love to give you the floor to give us and our audience a little bit of a background on what you're seeing from government stimulus, the CARES Act that was recently passed, although still doesn't look to be complete, as well as potential stimulus that could be coming down the path. And I think really what impact this is ultimately having on agents and brokers and potentially their client base in the very short term.
Absolutely. So with respect to the CARES Act itself, which was regarded as tranche 3 of the congressional efforts since the pandemic became a real crisis, $2.2 trillion. The most compelling feature of it, obviously for our member firms, has been the Paycheck Protection Plan or program within it, the PPP, funded at $349 billion, though every expectation that money they'll be heaving the cash out the back of the aircraft. And that's going to be gone pretty quick. The controversy of this week has been with respect to an additional $250 billion worth of funding that the Treasury Secretary and Leader McConnell are attempting to secure. I think that they'll get there, but the counteroffer from Speaker Pelosi and Chuck Schumer was, okay, $250 billion, but half of that needs to go to low-income, underserved communities, community banks, et cetera, lots of strings attached. And additionally, they upped the ante to another $300 billion worth of relief to healthcare workers, hospitals, municipalities. And so there's a back and forth process on that. I think they ultimately get there. It's weird because it's, all the ugliest elements of sausage making that you see in Congress are coming to play here. On the other hand, on all three bills, they've been accepted unanimously. So I think that will work its way through. I really view this, Phil, as essentially 3 tranches with respect to our commercial insurance interests. Obviously, liquidity is the most important thing to all of our member firms and to all of their clients. The first one was the fire hose of efforts for retrospective BI coverage, abrogating contracts. We had some firestorms on that with respect to some members of Congress that have signed some letters. We've had 4 states where such legislation has been introduced. We know that the litigation on this, that the trial lawyers are circling, and they're that's gonna play out over a period of time. I don't worry so much about this though. Lots of other things keep me up at night staring at the ceiling because I think that the insurance commissioners have held very firm on this and with respect to solvency concerns and abrogation of the sanctity of contracts. The second is obviously what is our role going forward, and we in the among all the property casualty insurance trades, an idea that was conceptualized by Frank Nutter at the Reinsurance Association for the creation of a recovery fund that was based upon the 9/11 Victims Compensation Fund, obviously much, much larger. And we've come together unanimously within the property casualty trade groups and a wide swath of the policyholder groups. They essentially are the groups that constituted the old coalition to insure against terrorism, led by International Council of Shopping Centers, National Restaurant Association, International Franchise Association, National Retail Federation, Real Estate Roundtable, big players on the policyholder side. And we've come to an agreement, and we're shopping that on Capitol Hill right now as a potential phase 4 solution. And what this essentially would do with voluntary participation, and we have a lot of interest from our member firms on the TPA side, on the brokerage side, on the claims adjusting side, to create a federal facility to facilitate business continuation and through the Treasury Department. How that is going to fit into the reality that we've still got a $2.2 trillion appropriation by Congress, and we've got $2.3 trillion worth of liquidity that the Fed is now offering up through the banking mechanisms, and that's on the loan front, doesn't solve everybody's problems. And given the fact that the CARES Act has a lot of holes in it, that PPP doesn't apply to everybody. I mean, we are seeing winners and losers in this. And finally, Phil, forgive me for going on.
No,
the
please.
third watch is prospectively. What do we do for clients? How is this going to be resolved beyond this crisis? And you saw Marsh got out there first with a TRIA-like solution. The overwhelming, we haven't formally addressed this, but we will be soon. The overwhelming majority of our member firms executives, not unanimous, I will say, because a lot of people do have concerns about bandwidth, but the overwhelming sentiment that I'm hearing from our member executives is that they want to be on the field and want the existing insurance mechanisms to be utilized as the framework for how we move forward. Now, that doesn't limit us to a TRIA-like option. There's the write your own model. There's the War Damages Act that was passed by Congress, which was after Pearl Harbor, which was essentially a federal endorsement for anything that was an act of war. Now, the war never really came to the mainland, so it wasn't utilized that much. And there are other models that are out there. That debate's going to evolve over the next couple of months. So those are essentially the 3 stages that I see us being in. And as I said, all our members care about is liquidity for everybody.
Joel, what you mentioned that kind of the recovery fund concept is being shopped on Capitol Hill right now and is being discussed as a potential opportunity. But what's been the reaction? Is there opportunity there? Is it positive? Is it being kind of is there reception to the concept at least?
Absolutely. This is where, decades of really being politically active and building relationships is hopefully going to bear fruit. Honestly, members of Congress on both sides of the aisle and spanning the ideological spectrum love the idea of something that brings together the entirety of the property casualty insurance community and all of the relevant business groups. Now, that's easy conceptually to sell. The devil is always in the details. On Wednesday, Nancy Pelosi said, "Sure, we're for adding on to the PPP, but we just want to make sure that everybody has access to it." That's eminently reasonable. By Thursday, the list had 15 different incredibly difficult things to reconcile, and so people are going to want to channel those dollars in a very specific way, and we're working through that. But we do have. I'm surprised and gratified by the kind of interest that we're getting on this. But again, I think right now people are trying to digest and unpack what are the implications for this Federal Reserve Act of. You can hear my dog unpacking it right now. Of that additional 2.3 trillion.
Yeah, and it's interesting, as it relates to the brokers and agencies that we've been interacting with over the last 2+ weeks. The PPP piece is there's a lot of confusion around it still. As you had said, it's still not even necessarily clear. And as everyone's working with their local or regional banks to figure this out, we've got clients that have applied and been approved, but there's no idea when funding will occur. We have some that are still deciding whether they want to apply or not, which we're certainly encouraging everybody to apply. But I think the concept that you mentioned about it being underfunded is certainly a concern. And then we've heard some individual clients have told us that they've heard from their banks that there could be additional requirements around eligibility that come down around hardship that may or may not happen. And there's just a lack of clarity. So there's firms that have been approved that think they could potentially be unapproved. I mean, it's, I think, again, the pace at which it was approved and pushed through legislation is great, but it's clear that it's not completely figured out yet. And, the ability of Congress to get some clarity to utilize this is going to be, I think, really important or critical in the coming days or weeks.
And as I know you've counseled your clients, if there's free money out there, go get it, particularly with respect to maintaining payroll. A lot of the difficulties that people have, my friends at the International Council of Shopping Centers, for example, the forbearance on the forgiveness on the loans is based on maintaining payroll. Well, if you're not, if you can't have workers there, that becomes a difficult thing. And I think most all of our member firms are trying their best to keep everybody that they can on board. It is structured as an entitlement, and every business in America is impacted by this. So, I use the analogy of just shoving cash off the back of the airplane. I know that, it's been a chaotic rollout of it, but I think that money is going to be rolling out and people need to act. I will say, with respect to resources, almost all of your, I would imagine that almost everybody who is watching this is a member of CIAB, and please go to our website, CIAB.com, and utilize the resources. I know everybody's doing everything they can for their own clients, but I don't want anybody to have to replicate efforts. We've got our legal team at Steptoe and Johnson. We've got webinars that you can access, literally one that is beginning in another half hour, where we've got more than 3,000 attendees of clients. So please utilize our resources. If there's confusion about how do you access this program, the evolution of the kinds of forms and documentation and interpretations, we're on top of that, and I want people to be able to utilize it.
So Joel, one final thought as we wrap, and really do appreciate your time. And this is probably not a simple question, but I had a call yesterday with a client of ours who's also a member of yours that's not in the United States, and they were asking me about the CARES Act. And I was giving them some updates and information relative to what's happening and what it is. And the $1 trillion question they asked is, how is the U.S. government going to pay for all of this? Where's the money really coming from? And I said, that's a question that some are asking, but others aren't paying too much attention to. And I'm sure there'll be some clarity and potentially downstream impacts in the short term. But I don't know if you have any good visibility into that, but it truly is the $1 trillion question.
The late, great Senator Everett Dirksen of Illinois was famous for saying $1 billion here, $1 billion there. Sooner or later, you're talking about real money. Now it's trillions. To think $4.5 trillion worth in the last 2 weeks that has occurred, obviously, the other, I barely escaped the University of Mississippi with a liberal arts degree, so I'm not an expert. I'm not an economist. But we had a $20 trillion GDP economy last year. And I've heard a lot of even conservative writers who have suggested that $5 or $6 trillion in light of this catastrophe may be worthwhile. But if it makes anybody feel better, Bernie Sanders came out with a plan a couple of days ago, and his would be, assuming this pandemic goes on for a few more months, would be a mere $12.6 trillion, or half of the entire federal debt that has been accumulated. So, there's that. Dog doesn't appreciate that either.
Well, that's a perfect place to stop, Joel. I can't thank you enough for bringing your knowledge base and spending a few minutes with us. Thank your dog as well. Mine's scratching outside my door. I'm not sure if that got caught on audio or not either, but thank you so much. Appreciate you referencing the resources that the council provides and makes available via their website. Hopefully those watching this on Monday are able to go out and do that, and certainly look you up if there's any additional questions. Thanks to the audience for watching. More to come as things evolve. Maybe we'll pick Joel back up for another interview and discussion in a couple of weeks as we learn more in what is a very, very fluid environment. So enjoy
I appreciate the opportunity, Phil, and I hope you and all of your clients and your families are going to be staying safe. All the best.
Likewise, Joel. Thank you. Enjoy your weekend. Talk to you soon.